Hello everyone, welcome back to our comparative analysis and strategy class. In this session, we will focus on about an interesting topic that it's important for us, at least when we are talking about numbers. Okay, when you're developing a strategy, most of the time they're going to ask you, okay, what are your numbers? What is your expectancy? And of course, what's the investment is implicated. So the topic relates to financial ratios. Okay, and the first thing I would like to go through is actually, have you heard about this concept in the past? Do you know what's a financial ratio? And more importantly, do you know what are the elements that you need to consider while doing this aspect? Well, all of this will try to have a very interesting insight about the potential outcomes and of course to realize why it's important to know about financial ratios, even though that you're not specifically from the finance field. Okay, this is one of the things that usually happens with the business majors that say, okay, I don't want to be related with numbers. Well, unfortunately, you need to know about those ones because every decision that you provide, and of course, the strategy that you want to work with, must implicate numbers, an investment, a budget. Okay, so let's take a look to actually what are the financial ratios. Okay, so in order to do so is the analysis that you're gonna do based on your financial statements. The most common and popular ones are related to balance sheet, income statement, cash flow, all of these that somehow provide the present of what's going on in the company. But if we just see the numbers by themselves, maybe we're not going to take a good analysis. That's why financial ratios can help us to have a better approach and of course to know what are the things that we must do in order to have a better performance. Okay, so particularly the balance sheet is a financial statement that can help us to know about the assets, liabilities, and shareholders equity. Okay, it's also known as a financial position, are the things that the company owns, that the things that they have in debt, and of course, what's the contribution that the business owners or investors have done in the past. Why it's important to know the balance sheet? Well, actually, as we already said, we need to know about the things that we have, and of course, if we need to pay something, okay, in advance or maybe in a future, maybe in a short or long term. And of course, how do they complement with other financial statements? Well, definitely with many others. Just realize that the last concept of the financial statement, which is the income statement, it's the net income. So net income is also part of the shareholders' equity. And of course, what are the three main classifications? Somehow it's already defined in the classification of balance sheets. Okay, so if you don't recall what was actually a balance sheet, the elements of the balance sheet, we can see assets, shareholders' equity, and liabilities. Those are classified into two elements, current and long-term, and current and long-term liabilities. Okay, we can see assets and liabilities. Remember that the assets are the things that the company possess or they have the right about it, can be tangible or intangible, and of course must have an importance and a relationship of this. Okay, and liabilities are the things that we need to pay. But when do we have to pay it? Is it more than a year? Is it a year or less? Well, that's the thing that will define if it's cataloged as a current or long-term liability. And well, another thing that we have to also go through is actually the income statement. Okay, for the income statement, it's important that we know it's also known as a profit and loss statement. And of course, it's defined by a specific period of time. For example, January 1st until January 31st. Okay, that's the range of time. When is the proper one? Well, every company, each company will define if they're going to do it by month, if they're going to do it every 6 months, each semester, or annually, which is more general. And of course, what are the main aspects that we can see in an income statement? It's kind of like in every level: revenues, net income, expenses, gains, and loss. Okay. The first thing I would like to also highlight between a balance sheet and an income statement is actually that the balance sheet established at a specific date. That means, for example, January 31st. Okay. But if we analyze with the income statement is a range of time from one period to another. So again, it's important that you know about this so you don't commit mistakes. What it's called an EBITDA, EBITDA is one of the levels of the income statement, which is known as earnings before interest, taxes, depreciation, and amortization. It's important that even though that you're not going to be an accountant, or if you're not directly related with accounting or finance, you know that every income statement possesses specific levels. And it's important for us to know the name because it's going to be established. And of course, what's the relevance, at least for marketing, because every decision, every strategy will also implicate an outcome in the income statement. Here we can see an example, okay, of what's actually an income statement, and particularly a historical one, okay? Based on that, we can also forecast. As you can see, 2018, 19, and 2020 are established based on the historical aspects. And also, as I mentioned previously, we can see that revenues, gross profit, total expenses, and all of these are levels, okay? Don't trick to yourself. Some companies might say they have 1,000,000 pesos in revenues. Well, that's excellent. But what are the net earnings at the end? Most of companies, they fail to accomplish a good objective because they think that revenues and net earnings or net incomes are actually the same. And unfortunately, they aren't. There's an investment that you have to do in order to get those revenues. And of course, that investment will also impact about the profitability of the whole decision making. So take a look next time when you are developing a particular strategy about how this is going to create an outcome to the income and balance sheet, okay? And last but not least, what are some of the advantages, at least for us, that we have to know about the financial statements? First of all, because it's going to help us to know about the behavior of the history of the organization. Again, we can see specifically in which elements are we investing more. And of course, if those elements are giving us the outcome that we're looking for. And of course, that's going to help us also to develop new strategies. That could be the argument that you might be needing in order to make an adjustment to eliminate that a strategy that isn't working anymore. And of course, that we have to know what's the investment that will be implicated for every decision that we are making. Okay, at the end, all of this is combined. That's why we cannot separate resources and the outcome from the strategy. Okay, it's important that you take a look about that. So in general, the conclusion is learn about your numbers, learn about how to work with these aspects, because otherwise you might be challenging and jeopardizing the whole productivity of your company. Also, because, well, unfortunately, people that may not have the best intentions, they might try to persuade you or not doing things correctly. So you need to read correctly your numbers in order to step ahead and avoid negative situation. This will be it for today. Thank you very much and have an excellent day. Bye-bye.